What's going on, everyone? It's Jack from Conservative Collectors, and today I'm here with another strategy video. We will be going over the 9 and 21 EMA momentum strategy and how you can successfully implement this into your trading style. Let's get into it. So you guys may notice I'm not using the Thinkorswim platform. Currently I'm using the TradingView platform for no other reason than to provide clearer videos for you guys to see where I'm getting these levels from and how to chart. No difference in the charts, just a different platform to provide a clearer picture. So currently I'm looking at the Disney daily chart, and recently we've seen a huge rally by Disney coming off of this downward channel break. So how would I implement this 9 and 21 EMA strategy when looking to go on the long side of Disney? So the blue line is the 9 EMA and the red line is the 21 EMA. Here I charted a downward channel, and you can figure out how I drew this from my previous video on bear flags, bull flags, and symmetrical triangles. But right here we have a downward channel and this previous level of resistance where sellers were most strong at. We saw a break here, but before then we noticed the 9 crossing up above the 21 EMA, which shows strong momentum, along with the strong buying volume. So when I'm looking at this 9 and 21 cross, I'm looking for a candle close above the 9 EMA, and I'm looking at the second candle for safest confirmation. And once we get that cross and a candle close above the 9 EMA, we can then use the 9 EMA as intraday support, and once we get a break below the 9, then we can look to sell. But if there's no break below the 9 EMA, there's no reason to sell. So if you were to use this strategy here, once we get the cross at 125, we still have yet to get a break below the 9 EMA, and we could have ridden Disney all the way to 170 just off of this one simple strategy. Now, once we do see a break below, then that's when we can look to take some of the position off. Alright, so now let's look at a different ticker to prove that this strategy works on any ticker of your choosing. Here we see NIO coming off of a falling wedge, off of a huge run-up, all the way from around $2 to around $58. That is a $56 run, finally pulling back, so that can indicate another $50 move higher. But when looking to play this, you can use the 9 and 21 EMA strategy to play the breakout and confirmation of momentum higher. So we recently have seen the falling wedge here, and we have a strong level of resistance where sellers were previously at. Now this 9 and 21 is starting to cross up, and this move is just beginning. But when this 9 and 21 crosses above and we have a strong candle close above the 9, we can then look to go long. Now, as long as the 9 EMA holds, we can see price continue higher, and this can potentially go to around $80 or $90 just based off of the pull. Using this 9 and 21 EMA strategy, you can also again use the 9 EMA throughout your swing position to look for support. I'll now show you how you can use this on shorter time frames for day trades and scalps to confirm momentum. Okay, so here we're looking at FUBO on the 5-minute chart, and how you could totally have played day trades on this just based off the 9 and 21 EMA cross. So, looking where it crossed previously, it crossed right around here on the after hours of the previous day. We can also look at a strong resistance level on the previous day where sellers were most active, and it was also the previous day high. Now, the next day we saw a gap up and the 9 and 21 EMAs crossing. So that shows pre-market strength and momentum. But the price is a little far away from the 9 EMA at open. We can look for a retest of the 9, and then we can look to see for price to continue higher. Now, the previous high of day on FUBO tried to break below but did not hold. The 9 then got retested, and we could have played calls all the way until the 9 broke below. We need a candle to close below to then sell your position and look for a re-entry. If you played this strategy, you could have played from around 40 to 49-ish dollars, and that's around a 200-300% gain on at-the-money contracts, and that's an easy day trade just using EMAs as intraday support and resistance levels. And these are also great when you're at all-time highs and you have no idea where your next target is. You can use the 9 EMA as your intraday support, and a break below, then you can sell. So this is a simple strategy that I hope you can incorporate in your trading strategy. Again, higher time frames are much more powerful because those daily candles provide much more weight, and you can use those for leaps, month out calls, anything that you choose. As long as the 9 EMA is not broken below, there's no reason to sell, and you can ride price up all the way until we see a breakdown below. I hope you guys enjoyed this, and be sure to look out for more strategies in the future. Thank you all for the support, and I'll see you in the next one.